Hello and welcome to the final chapter in the Bankers Masterclass series, investigating how finance can be utilized as a catalyst for change, sponsored by Standard Chartered. I'm Joy McKnight, editor of The Banker, and Karen Flinspach, Regional Head, Transaction Banking, Europe and Americas at Standard Chartered, is back with me to discuss digitizing global trade flows and how this shift will impact the real economy. Thanks so much again for joining me, Karen. Let's take a little bit of a step back and talk about what are the big challenges that global trade is facing today.
Global trade flows probably peaked in June 2022, and then due to change in commodities prices, geopolitical tensions, etc., slowly decreased. And what we're seeing now is very moderate or even a slowdown in growth. But there's also a shift of the trade poles to Southeast Asia or Asia in general, as well as Sub-Saharan Africa. So that requires just a shift in capacity, scale, and scope among all the players to shift in these different poles. And then we have to remember that trade is always very manual and very paper-based.
Obviously, there's now this big sort of move to digitization, but how are these digital platforms and emerging technologies really starting to impact global trade flows?
As I said just now, that paper is still prevalent in a lot of the trade flows, particularly in documentary trade. But there are a lot of tech companies emerging that are digitizing and automating parts of some of the trade flows. The challenge is that there is not yet a system that allows us to do an end-to-end digitization of trade flows. And that means that interoperability of all of these providers is really, really key. And that will bring true efficiency.
Okay. And then, of course, we're looking towards an end state where all these trade flows are digitalized. How will that actually impact the real economy?
Technology is a great connector, and therefore, if you have to technology, it allows speed, it allows different market participants, it allows, just connect different parties that had never the chance to do that before. And so if you look at the economy, for example, in the emerging markets, you allow new market participants that can now connect through technology and doing trade with participants that are outside their direct country influence and also overseas. So technology in trade really allows to connect more parties, more marketplaces, and bigger growth through speed. Also, if you think about trade, particularly through online platforms, you will see that people buy much smaller samples of goods. And, again, technology will allow to do that and also to allow the payments into collections that is ultimately required for these trade flows.
And the other hot topic, obviously, is sustainability. How could digitizing trade flows actually help with those sustainability objectives?
So tracing any sociability factors or sustainable trade requires digitization, requires data to flow, to make it transparent and to ensure that the right measures are actually driven. So digitization is absolutely necessary to make sustainability a growth goal, efficient, and help our clients also to drive that.
Well, thank you so much for your insights, Karen. And thanks to the audience for listening. This concludes the Bankers Masterclass series on finance as a catalyst for change.